markets at lunch and expiry day, the Nifty down 0.5%.
Plenty of big fundamental and technical voices join us on the show this afternoon. We've got Nirmal Jain of IIFL is bullish on India in the long term. He believes that the marginal recovery in monsoon is a key positive trigger for the economy. He's also a little bearish on stocks in the power and infra space. Listen in.
India, as I said, is an attractive foreign capital destination from a longer term perspective. But I don't have any precise information on who is investing and what kind of money. Most of the sectors like infra, power, real estate, which are capital intensive, at this high rate of interest, the viability itself comes under question. Monsoon is an important factor for Indian agrarian economy, although agriculture accounts for a very small part of GDP. But there is a cascading impact of monsoon on industrial sector, and agriculture and industrial sector together will have on services sector. And even from sentiment point of view, government action point of view. So I think recovery of monsoon is a good news, and we should pray that monsoon ends up much better than what earlier fears were.
Okay, let's chat market technicals then, considering it is turning out to be a day with a negative bias, down about 25 points. Ashwini Gujral, fund manager at ashwinigujral.com, joins in for more on market perspective. Ashwini, at 5260, where is the Nifty headed?
Well, on an expiry day, it's a pretty lackluster move, and slowly we are grinding down, and chances are we will soon head into these supports of around 5150, 5200. I don't think there will be much support before that, and once the expiry is over, probably the trend will further reassert itself in the next month. So we did try to get above 5280 a couple of times, but I think the market is giving up on the downside, and you should remain with your short positions.
Remain with your short position, says Ashwini Gujral. Let's get a quick update then. It's expiry day, and Darshan Mehta joins in as always with a quick snapshot of it. Darshan?
Sandeep, at this point of time, clearly fresh shots are being seen on the Nifty. The rollovers aren't very impressive, just around 53%. Last time, it was close to around 65 to 70%. So clearly the rollover is not happening. What we're seeing is we're way below the 5300 mark. On where an individual strike price, you're seeing there is a lot of call writing happening as far as the 5200 and the 5300 call is concerned. The 5300 call is very active, and on the lower side, on the put side, the 5200 put is very active. So as far as the expiry is concerned, it should consolidate between 5200 and 5300, but it will be on the lower side. So very low chances that the markets might go above the 5300 mark in this expiry. As far as the next series is concerned, we are seeing call writing happening at levels of 5300 and 5400, and put writing is happening at levels of 5100 to 5200. So clearly for the next series, the trend is much higher, 5100 to 5400. So even at in the next series, we are seeing that positions are being taken as low as 5100. In terms of rollovers, counters like a Tata Communication is seeing rollovers to the tune of 91%. There's United Spirits, which is in the F&O band again, that is seeing rollovers to the tune of 85% on the long side. Gujarat Fluoro is seeing, and among the heavyweights, BHEL seeing rollovers to the tune of 80% and Hindalco 78%. Among the low rollovers, you're seeing counters like a Bhushan Steel 35%. HDFC has disappointed, rollovers to the tune of just 40%, and ACC just rollovers to the tune of 45%.
Okay, Darshan, many thanks for those futures and options details.
Okay, shift away from stocks and news and talk about the big macro cue that the market is going to be closely tracking. The first quarter GDP numbers are going to be out tomorrow, and our poll suggests the number is going to be anywhere in the range of about 5 to 5.5%. 5.3% is what we are looking at. Let's bring in our macro analyst Poonam Sani, who tracks the economy very closely. Poonam, what are you gathering? What's the number likely to be at? And this could be a big spot of concern for the market.
We have the June quarter GDP at 5.2%. That is the expectation, and it is going to be, the GDP is expected to grow at the slowest pace since the March 2009 quarter, which is, as we all know, that we all are used to, that the GDP is going to grow at a slow pace as of now. Now, in terms of the internals, if you look at the agri output is expected to be somewhere around 2.4%, a little better than the last quarter. However, it is below the normal range of growth of 3.5 to 4%. However, the weak monsoon that we have seen is not going to impact in the June quarter numbers. It will be impacting in the forthcoming numbers. In terms of the manufacturing and the mining output, we already saw a weak manufacturing and mining output in the IIP growth that we have seen of late. The electricity output is going to be good. Within the services is going to be impacted again because of the slow pace of industry growth, and the construction sector, however, is going to show an improvement because of very good improvement and good numbers from the cement production that we have seen. Within the services sector, again, the insurance and the financing services sector is expected to grow somewhere around 10%, which is at a similar pace that the last quarter. In terms of the future outlook, well, most of the economists do peg the GDP at around 5.5 to 6% for FY13, with a downward bias because of Eurozone concerns as well as concerns on the overall global slowdown. Domestically, fiscal consolidation is a huge risk. Most of the economists expect fiscal slippages, and we already know that the rating downgrade pressure is already there. Again, domestically, inflationary expectations are definitely going to remain high, and from the RBI on the forthcoming policy on September 17th, no action is expected by most of the experts. Only a cut of approximately 50 bips is expected, that also towards the fag end of FY13. We need government action definitely very quickly, very swiftly for Indian economy as of now. Over to you.
Okay, Poonam, we'll leave it at that. That's the big data point which is awaited, and that's going to come out tomorrow in the first half of trading session.